Bitcoin mining refers to the process of digitally adding transaction records to the blockchain, which is a publicly distributed ledger holding the history of every Bitcoin transaction. Mining is a record-keeping process executed through immense computing power. Each Bitcoin miner around the world contributes to a decentralized peer-to-peer network to ensure the payment network is trustworthy and secure. To securely add to the blockchain ledger, Bitcoin mining computers solve complex mathematical problems. When a solution is found, the latest block of confirmed transactions is added as the next link in the blockchain. As an incentive to mine and contribute to the network, the miner who solved the problem is rewarded a block of Bitcoin. In today's video, we will be showing you Bitcoin mining. Is it still worth it? How does cryptocurrency mining work? Without further ado, let's begin. What is Bitcoin mining? Bitcoin mining is the process of earning Bitcoin by running the verification process to validate Bitcoin transactions. The verification process requires solving complex mathematical problems and competing with other miners to solve these calculations quickly. During the mining of cryptocurrencies, a computer is trying to solve complicated logic puzzles to verify transactions in the blockchain. When this process is completed, the miner receives cryptocurrency as a block reward. In December 2017, the profit in USD per hash was $2.28, and in April 2022, it was $2.22. The Bitcoin network will be capped at 21 million total Bitcoins. This has been a key stipulation of the entire ecosystem since it was founded, and the limit is in place to attempt to control the supply of the cryptocurrency. Currently, over 18 million Bitcoins have been mined. As a way of controlling the introduction of new Bitcoins into circulation, the network protocol halves the number of Bitcoins awarded to miners for completing a block about every 4 years. At the beginning stages of Bitcoin, in the early 2000s, individuals interested in Bitcoin mining were able to do so using their personal computers. As its popularity increased, so did the difficulty of mining. To accommodate the growing level of difficulty, more computer processing power was required. Soon, miners used gaming computers to attempt to mine Bitcoin. The process repeated, and the mining difficulty and amount of computing power required increased. Eventually, computers and chips were created for the sole purpose of mining Bitcoin. Today, it requires efficient hardware, those with strong computing abilities and energy efficiency. Solving the Bitcoin algorithm to add to the blockchain and receiving Bitcoin requires an immense amount of electricity. Keeping electricity costs low is key to making Bitcoin mining profitable and sustainable. How miners paid. The network recognizes the work conducted by Bitcoin miners in the form of providing rewards for generating new blocks. There are two types of rewards: new Bitcoin created with each block, and fees paid by users to transact on the network. But how much does a miner earn? The block reward of newly minted Bitcoin, amounting to 6.25 Bitcoin as of May 2020, is the majority of the miner's revenue. This value is programmed to have at fixed intervals of approximately 4 years so that eventually no more Bitcoin is mined, and only transaction fees will guarantee the security of the network. By 2040, the block reward will have decreased to less than 0.2 Bitcoin, and only 80,000 Bitcoin out of 21 million will be left up for grabs. Only after 2,140 will mining effectively end, as the final Bitcoin is slowly mined. Even though the block reward decreases over time, past halvings have been amply compensated by increases in the Bitcoin price. While this is no guarantee of future results, Bitcoin miners enjoy a relative degree of certainty about their prospects. The community is very supportive of the current mining arrangement and has no plans to phase it out like Ethereum, another major mineable coin. With the right conditions, individual Bitcoin miners can be confident that the venture will turn a profit. Although mining is a competitive business, starting is still relatively easy. In the early years of Bitcoin, hobbyists could simply boot up some software on their computer and get started right away. Those days are long gone, but setting up a dedicated Bitcoin miner is not as hard as it may seem at first. What are mining pools? The miner who discovers a solution to the puzzle first receives the mining rewards, and the probability that a participant will be the one to discover the solution is equal to the proportion of the total mining power on the network. Participants with a small percentage of the mining power stand a very small chance of discovering the next block on their own. For instance, a mining card that one could purchase for a couple of $1,000s would represent less than 0.001% of the network's mining power. With such a small chance of finding the next block, it could be a long time before that miner finds a block. And the difficulty going up makes things even worse. The miner may never recoup their investment. The answer to this problem is mining pools. Mining pools are operated by third parties and coordinate groups of miners. By working together in a pool and sharing the payouts among all participants, miners can get a steady flow of Bitcoin starting the day they activate their miners. Statistics on some of the mining pools can be seen on blockchain.info. Interest in cryptocurrencies has surged since 2015 as Bitcoin has seen its value rise from about $300 per coin to a peak of about $20,000 per coin in December 2017, then dropping to about $8,000 per coin as of November 2019, before rising to record highs of nearly $67,000 in October of 2021. Other cryptocurrencies have too seen similar surges and dips in value. While buying on an exchange like Coinbase is usually fairly simple and allows you to buy fractions of cryptocurrencies, there are those who prefer to mine Bitcoins. The best option likely depends on individual circumstances. Mining cryptocurrency seems like a no-brainer. Set up a computer to help solve complex math puzzles, and you are rewarded with a coin or a fraction of a coin. Is Bitcoin mining worth it? To find an answer to the above question, please conduct a cost-benefit analysis using web-based calculators to see whether Bitcoin mining is worth your effort. A cost-benefit analysis is a systematic method that organizations use to determine which actions should be undertaken and which should be avoided. First, determine whether you are willing to invest the required initial capital in hardware, and determine the future value of Bitcoin and the level of difficulty before committing your resources. It's also crucial to examine the amount of difficulty specific to the cryptocurrency you wish to mine to see if the mining operation would be even lucrative. When both Bitcoin prices and mining difficulty fall, it usually means fewer miners are mining Bitcoin and that acquiring Bitcoin is easier. Nonetheless, expect more miners to compete for fewer Bitcoin as Bitcoin prices and mining difficulty climb. What else need to be considered? Risks of Bitcoin mining. The economics of mining Bitcoin. Purchase them on an exchange. Receive them in exchange for goods and services, and mine new Bitcoin. Alternatives of mining. Salad, NiceHash, G2 deals, and Mintergate. While Bitcoin mining sounds appealing, the reality is that it's difficult and expensive to actually do profitably. The extreme volatility of Bitcoin's price adds more uncertainty to the equation. Keep in mind that Bitcoin itself is a speculative asset with no intrinsic value, which means it won't produce anything for its owner and isn't pegged to something like gold. Your return is based on selling it to someone else for a higher price, and that price may not be high enough for you to turn a profit. So guys, let me know your thoughts in the comments section below. For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.